Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks, so stocks that are paying the highest premiums for covered calls and cash secured puts. Before I jump into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump straight into it. I'm logged into the Thinkorswim platform and I'm going over to the scan tab, and I will be scanning within the S&P 500 and only looking at stocks that are above $1. And let's go ahead and click scan. And then I have this sorted by implied volatility. So right now we can see the stock with the highest implied volatility is Nvidia. And this is aftermarket data, so keep that in mind. And this is potentially because earnings are coming up, and also there was a big sell-off today, but Nvidia is currently our top stock for the highest volatility. So we will go ahead and check out what that looks like in terms of options premiums that you could make. I'll be looking 9 days out since this is more of a weekly scan. So here we can kind of see with my custom column, I can quickly get a sense of what percentage you can expect to get as a return if you were to sell a cash secured put. If you want to check out that script, it's always in the description down below, so feel free to check that out. But if we look at an example here, if you were to sell the $400 strike price and you ended up collecting some amount of premium between these two values, that would be about a 0.85% trade in about 9 days, which isn't too bad. But again, with cash secured puts, you would need potentially 400 times 100, which is $40,000 if you were to get assigned on those shares. So keep that in mind. So let's jump back to the scan tab and check out a couple more, and feel free to pause the video and look at the whole list if you want. We also have Macys as one of the highest volatility stocks currently, and that's most likely because earnings are coming up. So let's go ahead and jump over to the trade tab and check out Macys as well. And here for Macys, we can see if you sold the $15 strike price cash secured put, you could make about 1.2% in 9 days. And then on the flip side, on the covered call side, if you were to buy 100 shares right now and then sell the $16 strike price, you would get $32, and it would cost you $1,569 in order to purchase 100 shares. And we'll go ahead and look at one more of these stocks. Here we have Norwegian Cruise Line, 46% volatility and $17.90 currently. If we check out the trade tab, you could sell the $17 strike price and collect somewhere between 16 and 18, so probably $17 for a 1% profit in 9 days. And again, each option contract is equal to 100 shares. So if you did get assigned, you would need $1,700 in order to purchase those shares. And then on the covered call side, if you bought 100 shares, that would cost you $1,790 currently. But then you could sell the $18 call for $45 and collect that in 9 days. And potentially you would get your shares taken away if it closed above $18. If you want to see this scan every week, feel free to subscribe and like the video so you can stay up to date. And I will try to do this scan during market hours so the numbers are a little bit more accurate rather than after hours. And as always, don't forget to like and subscribe, and I'll see you all next week.